Hello and good morning everyone. Welcome to the Moneycontrol live stream. You're watching Markets with Santo and CJ. Well, I have a lot of bad news on the plate and some good news for you. So let's just get down to it. Well, if you look at the setup at this point of time, it's a very muted setup given what has happened overnight in Wall Street. The Nifty futures on the XGX are indicating a muted, opening for the markets, probably with a negative bias. But if you look at Wall Street, they ended lower, although considerably off their day's low after a very high CPI inflation print for the month of June. 9.1% inflation, a 41-year high. So clearly a lot going on there. The inflation print definitely, was much ahead of what the market was expecting, and it really spooked a lot of investors. The stock market, the bond market spooked everybody out there. But now, what is the consequence of all of this? Well, if you look at the the interest rates futures market, Santo, they are indicating that now market is expecting even more aggressive rate hikes going ahead from the Fed. And a Fed member, one of the Fed members, Bostic, added fuel to the fire by saying that everything is in play when he was asked whether we could see 100 basis point. Yes, you heard that correctly. 100 basis point rate hike in the upcoming July meeting from the Fed. So clearly, at this point of time, traders are betting that there is almost an 87% chance that the Fed could hike rates by 100 basis points in the upcoming meeting. Now, where is the good news in all this? Well, it is good news, but it is actually bad news, but it can be construed as good news if you're a stock market investor. Why that is so? Because while they are also betting that, there could be a 100 basis point hike, they are also fearful that, this sort of a pace of rate hike could break the back of the US economy and tip it into a recession or a technical recession probably by the end of this year. Now, if you look at those interest rate futures market, next year, first quarter, they are expecting the first rate cut from the US Fed. So clearly, the sentiment at this point of time has totally flipped, and probably you could go, going ahead, you could see that as fears of more, recessions actualize actually, then you could see rate cut expectations being built into the market. And for stock market, rate cuts have always been good news. I will not be surprised in another 6 months if there is a talk of another quantitative easing. I mean, clearly that is what the market wants. It wants to be primed all the time since the global financial crisis. I think that is where we have seen the reaction from Wall Street, wherein it came off the day's low, and probably we are seeing the reaction on the large street as well, where we are only expecting a muted opening.
Well, true. Just one thing that can be said in favor of Indian markets at this point in time is that the inflation situation is not looking as bad as it is.
Absolutely,
but the big worry is the rupee. If the rupee continues to be under pressure, then probably the RBI might hike short-term rates as it has done during 2013 when it had hiked the marginal standing facilities, and that did quite.
I mean, you look at the expectations. Santo, the estimates that are coming out for the dollar index. Some people are expecting this bull run in the dollar to take it as high as 118. That would be disastrous for emerging market currencies. I mean, leave alone what happens to the global economy is a different conversation, but emerging market currency will definitely see a lot of losses because of this. There have already been fears about defaults in Latin America. We have seen what is happening to countries like Turkey, Sri Lanka, Pakistan. Already the developing world is feeling the pain, and it can only get even worse if the dollar's rise continue.
Well, with that, let's quickly move into the stocks for the day, starting with Cholamandalam Investment and Finance. CJ, now this is a stock which has been holding ground. It's already gained about 20% for the year so far, among the better performers. Primarily a vehicle financier, but the company is trying its best to get beyond that. It's diversifying its portfolio, and some bit of it seems to be working already in the fourth quarter. The disbursement in the segments other than vehicle finance had increased by about 14%. So there is some kind of payoff now beginning to set in. ICICI Securities is quite bullish on the stock. It has listed all the initiatives that the company has been taking. Now it's trying to get into multiple segments there. It started loans for consumer and small enterprises.
Right.
Besides that, it started secured loans for businesses and personal loans as well. And also with the acquisition of PaySwift and investment in Paytail, it's aggressively getting into the fintech space. There's a bit of digital transformation play also there. ISEC has a price target of 743 for the stock.
Well, Santo, of course, Cholamandalam has been trying to diversify business for its, loan book for a long time now. The past 1 year, we have seen that become, accelerate largely also because I think that the gold loan business is also sort of now not no more the golden goose that it used to be. We have seen that a lot of competition is coming from traditional banks, new fintechs into that gold loan space. And clearly, I think Cholamandalam has realized that if they continue to be in the space, their profitability is going to take a hit. And I think that is where a lot of the concerns are, margins and profitability. What is going to happen to that, given the high intensity of pressure that we are seeing in the gold loan business, along with the fact that for a lot of these NBFCs, borrowing costs are now on the up and they will probably remain higher over the next 12 to 18 months, given the rate hike cycle that is currently undergoing. So for me, I think that is why probably I'll be a little skeptical on the stock, even though it has held steady in this market. It does not mean that you're going to make a lot of money out there. Apart from that, also, while ICICI Securities is bullish, they've also pointed out, just to remind you, that inflation is a key risk for Cholamandalam because that could hurt, loan demand going ahead. Of course, as a consumer, if you're not able to afford groceries, it's very highly unlikely that you're going to go out and take a loan out on a motor vehicle or on a personal loan or anything like that. So clearly, there are risks to this story at this point of time, even though the steady performance so far in 2020 would be heartening for a lot of investors. Well, one stock where, there was a lot of skepticism getting into the earnings, but wow, what a result from Mindtree. I mean, they have totally smashed all the skeptics out of the park, in my opinion, Santo. A very, very strong Q1 performance, beating almost on every parameter out there. You talk about margins, you talk about revenue, you talk about net profit. They were ahead of analyst estimate. Revenue, you look at the Q1 margins. That for me, I think, was probably the biggest highlight, coming at around 19.2%, which was much higher than what analysts were expecting. So clearly, this is one mid-cap, company. Actually, it's no longer mid-cap, given that with the merger now, it would probably become the top 6 or big 6 of IT companies. But clearly, this is showing that there could be possibility that investors might shift towards mid-cap IT companies if they're chasing growth, because clearly that might not come in the large cap names, as has been indicated with the earnings of TCS and HCL Tech. So clearly, Santo, I think I would be expecting a very, very good move on the stock today.
Well, CJ, very little chinks in Mindtree's earnings, especially the margin beat, which has really impressed most analysts. Except UBS has mentioned here that the margin improvement to some extent could have been largely because of favorable forex movement, and
which I think will still remain in favor of them, given that we are expecting the rupee to depreciate going ahead. I think it is something that continue to aid in the coming quarters.
That said, CJ, the overall outlook on the IT sector has changed quite significantly. In fact, most analysts now are not talking about 1 or 2 quarters. They want to see, what is going to happen, FY24 onwards. In fact, the visibility now, what they are seeking, the comfort, the assurance that they are seeking has moved a little forward. And given the overall macro environment, I think that is the key factor at this point in time. If the market is slightly cautious on top line IT companies, it's very unlikely that they would like to bet big on.
But Santo, I think in the past also we have seen this dichotomy in the IT space, wherein there are times when the large cap IT names do not perform, but investor focus shifts to mid cap IT names because of the higher growth that they offer. Also helped by their agility, their nimbleness, and because of their low base. So I think there is a possibility that going ahead, because a lot of these mid-cap names have actually taken a lot of beating. So for me, it remains a possibility that you could see a contrarian bet coming into the mid-cap IT space.
Well, Ramco Cement is the next stock on our watch list. Huge build-up of short position, and that's what's caught my eye. About 17 lakh shares outstanding in NSE's lending and borrowing window. Now, the stock has managed to make a good comeback, about 12% up over the last couple of weeks. Outlook for cement stocks in general has been quite bearish. Now, the case of Ramco, again, like for other cement companies, they've been taking price hikes, but at the same time, it's just about helping them offset higher input costs. Input costs have been steadily rising.
Yeah.
Now, we are also moving into a slightly weaker quarter for cement companies in general. Monsoon is when construction activity slows down considerably. Besides this, there seems to be very little relief as far as rising input costs go, because petcoke and coal prices have been quite high during Q1, and that is clearly likely to reflect in the earnings. So I would be slightly cautious on Ramco Cements, notwithstanding the recent recovery in its stock price.
Well, Santo, I'm not surprised by the bearish positions. Clearly, given that the outlook for earnings for the entire cement pack is quite negative this quarter because of higher fuel costs, as you mentioned. But I think the fuel cost story is probably turning now for the good. We have seen that the government has taken measures in order to cut down on import duties for coal imports. A lot of companies are trying to get in probably cheaper imports, coal imports from outside, given the coal supply condition here. So and with the decline in global crude oil prices that we have seen in this quarter, it is possible that cost side of the dynamics could start improving and maybe in the favor of cement companies. Also, the volumes for so far have been good and sticky enough for cement companies to give them some heart there, and I would be expecting that in the H2 or in the second half of FY23 you could see a decent recovery on the margin side as well as on the volume side. And that is why, and also let's not forget that if there are short positions in the SLB segment for Ramco Cements, you could expect a good short covering in the first week of August, so watch out for that, guys. Well, one stock that probably does not need short covering and has been quite bullish, I mean the market has been quite bullish on this counter, is PVR. And UBS Securities came out with a note today highlighting some of the positives that are there for PVR in this quarter. They are saying that they are expecting the best ever box office collection for PVR in Q1. Now, this is something that has been talked about a lot, that the reopening theme has benefited multiplex owner like PVR, and clearly this will be one company that could be the most sought after in this year, given the sort of returns that it has already offered investors. Apart from that, why the box office collections have been so good? We know that Bollywood movies have not been doing that great, and there have not been that many releases from the Bollywood side, but it is the rising trend of South-based movies. The consumer appetite or preference has suddenly shifted post-pandemic. After 2 years of watching, South-based movies on Amazon Prime and Netflix and where not, I think clearly South-based movies have been driving footfalls into theaters, and PVR is clearly benefiting from that. Apart from that, UBS sees a lot of upside, significant upside in the stock going ahead, especially on the back of the merger, the pending merger with Inox Leisure, and they're expecting the street to go ahead and upgrade the earnings of the company. So clearly, a lot of things are working in favor of PVR.
Well, and I won't dispute that either. Purely on, you can't just value this company using your traditional parameters. That much is obvious by now. Strong appetite for the stock at this point in time. There is clearly the reopen theme that is playing out. Besides that, strong box office collection is cherry on top. So I think, but the only thing I would caution is the stock has already had a good run up so far. It was not very under-owned. It was not very over-owned till about a year back, because there was a lot of negativity over the sector in general.
I mean, for 2 years it did nothing almost.
Yes, but now that is slightly changing. So probably that is one area where I would be slightly cautious about. Well, the last stock on our watch list today is Tata Metaliks. Now, CJ, disappointing numbers there.
Yeah, I'm surprised. Why is it on your list?
Yeah, it's on my list for just one reason. Now, the market is very heavily focused on the pig iron part of the company's business, which is where the pain point seems to be. The stock has also corrected quite sharply since last August. In fact, it has almost halved. Now, the story could change slightly going forward. Now, the company is doubling its capacity in the ductile iron pipe business by almost from 2 lakh tons to 4 lakh tons. One phase of capacity expansion has already gone on stream. The next one will happen sometime towards the end of this fiscal. Now, ICRA, rating agency, in fact, kind words for the stock has come from a very unexpected quarter. It's come from ICRA. ICRA has noted that, overall in the ductile iron pipe segment, the recent contract prices have been rising. It's been booking most contracts at a higher price. And remember, Tata Metaliks is one of the beneficiaries of the government's Jal Jeevan mission, where it intends to, have potable water reach all 100% of households in India. So the big story on Tata Metaliks is not so much about the pig iron prices going forward. It will be from its ductile iron pipe business, CJ.
But that said, Santo, clearly the pig iron business still dominates the contribution to revenues as well as profitability. And if you look at the earnings, I mean, disastrous numbers, 99% year-on-year decline in profits in Q1. Almost margins have been halved, more than halved in this quarter. So clearly, it was going to further dampen the sentiment on the stock. And if you look at the long-term technical indicators, they're also indicating that bearishness on this counter is going to continue. So you are unlikely to make any money.
Well, with that, the market has opened up 42 points on the Nifty.
Wow, nice, impressive.
And again,
Very
strength
impressive.
in mid caps and small caps. At 1200 advances versus 405 declines. Nifty Bank is also up 0.2%. Overall, I think we are in for a very firm start.
Yes, Santo, it seems like the market is expecting the bazooka from the Fed to come probably later this year or next year. I think clearly investors have been, it's like being a drug addict, right? When it's taken away from you, that dopamine effect is taken away from you. You throw tantrums, and market has thrown that tantrums for the past 7-8 months. And now, when there is a possibility on the horizon that that dopamine effect could again come back, you're seeing that even a bad economic data, bad news is actually good news for this market. A bad CPI print in US like that of 9.1% for June has clearly triggered a bounce back or rebound in the market. If you look at the top gainers at this point of time on the Nifty, they're IndusInd Bank clearly after the 3% fall yesterday on reports of one of his, if I'm not wrong, one of his employee being investigated by the Enforcement Directorate. Clearly, there's been a decent spurt back on the stock. Bharti Airtel is doing well after almost a 10% correction in the past few days. And HDFC twins, the HDFC and HDFC Bank, are the ones leading the indices higher. So clearly, some of the heavyweight names, Reliance as well, contributing to this upswing in the market. But we will have to wait and see whether it sustains or not. The mid-cap space clearly is the one that is doing quite well, Santo. If you look at the mid-cap index, higher by about 0.3%. I have been stating this for quite some time now, that the small and mid-caps clearly are suggesting that there is some turnaround in the sentiment, probably driven by retail investors. Because if you look at the FII selling figures, it was more than 2,500 crores yesterday, and the buying figures from DII was only about 1,700 crores. So the difference probably was made up by retail investors, and that is probably a heartening sign for the bulls out there.
We'll soon get to know whether they're catching falling knives. Well, with that, it's a wrap on this edition of Market with Santo and CJ. Thank you for watching, and do let us know about your feedback in the comment section below.
And as usual, guys, keep following us on the social media links at the bottom of your screen. And for rest of your financial news, stay tuned to moneycontrol.com and download the Money Control app. We'll catch you again live at 3 p.m. Till then, have a great trading session.